From an over 2% initial rally in Nasdaq, futures have swung over 4 percentage points as Trump unveiled reciprocal tariffs pretty much across the world. While the initial baseline 10% tariff may have cheered the market, the reciprocal tariffs based on tariff and non-tariff barriers put together clearly turned out worse than feared. In what he termed as Make America Wealthy Again, the plan is essentially aimed at getting manufacturing and jobs back to the United States, outlining commitments of over $6 trillion to be invested by American and foreign companies. The problem is that even if this works, the gains are long dated and uncertain. Now, is there a silver lining in all of this? Maybe. While not explicitly outlined, we think this opens up the scope for negotiations, so this may not be the final word. Trump and his cabinet think this raises revenues and they will essentially pass that back through tax benefits. We think this is a very, very long shot, with risks of economic accidents far more likely. And not just in the US, but trade barriers and tariff wars threaten global growth as well. Will it raise inflation? Initially, there is that risk. But a more likely outcome is an economy that sinks faster as demand comes off. The jobs market is already cooling, and it's increasingly likely that the Fed is now forced to ease faster. The futures are already pricing in 3 rate cuts by the end of this year. As we have discussed before, the likelihood of today being a clearing event was slim, and unfortunately, it's played out that way. Uncertainty, volatility, and a bearish hue are intact, as is the downtrend. This is Sunil Garg from Lighthouse Canton.